This is the Daily Market Comment by Marios Hadjikyriacos. I'm Maria Pachurdias. Thanks for joining us at XM.com. Global markets entered the new trading week in a cheery mood. Wall Street cruised higher as investors continued to pile into tech and semiconductor shares, while commodity prices staged a cautious recovery, shrugging off a gloomy manufacturing survey from the United States. Manufacturing activity suddenly collapsed in May, according to the Empire State Survey, with new orders falling sharply, which is usually an omen of weaker growth ahead. The Nasdaq Composite rose by 0.66% to close at its highest levels since August, extending a rally that has been fueled by speculation for Fed rate cuts later this year and stronger than expected earnings. In the FX complex, the underlying theme was a softer U.S. dollar in a session characterized by disappointing data releases and a barrage of Fed speakers. The sense among Fed officials is that another rate increase in June is still in play, although the bar for delivering it is high. Market participants are saying that's not realistic, pricing in a mere 15% probability of a rate hike next month and rate cuts for the remainder of the year. Therefore, there might be a time window for the dollar to stage a comeback in coming weeks if incoming U.S. data validate the prospect of another rate increase or push back against the notion of imminent rate cuts. The fireworks will continue today with the release of U.S. retail sales for April and another round of debt ceiling negotiations between President Biden and Republican Speaker McCarthy. Retail sales are projected to rebound by 0.8% in April, although some monthly card spending data from Bank of America spell some downside risks around this forecast. On the debt ceiling issue, the two sides remain far apart, so it's unlikely a deal will be reached before the early June deadline, where the government is set to run out of cash. A batch of surprisingly weak data releases out of China is in focus today. As telegraphed by business surveys, the Chinese economic data pulse weakened in April. The data suggests that the reopening boom has started to fade, and Chinese authorities might need to resort to greater stimulus measures to hit their growth targets. This is today's Daily Market Comment. Thanks for joining us at XM.com.